Welcome, fellow truth seekers, to a journey that will reshape your understanding of the world as we know it. Today, we delve into the prophetic words of Jim Rickards, who has sounded the alarm on a looming banking crisis set to shake the foundations of global finance in 2024. Jim Rickards, a renowned economist and financial strategist, has spent decades decoding the complexities of the global financial system. His track record of accurate forecasts precedes him, making his latest warning impossible to ignore. But why should we pay attention? What evidence does Rickards present to support his claim? To uncover the truth, we must embark on a comprehensive exploration of the economic landscape. Our journey begins with an examination of the structural vulnerabilities inherent in the modern banking system. From the tulip mania of the 17th century to the subprime mortgage meltdown of 2008, history has taught us that excessive debt and speculative excesses often lead to catastrophic consequences. But what sets the stage for the crisis of 2024? To answer this question, we must unravel the intricate web of interconnected factors driving the global economy to the brink. At the heart of Rickard's warning lies the insidious rise of debt, a ticking time bomb threatening to implode the financial system from within. In an era of easy money and reckless lending, debt has become the lifeblood of economic growth, masking underlying fragilities with temporary prosperity. But it's not just the sheer magnitude of debt that's concerning, it's also the asymmetric distribution of risk across the financial ecosystem. As debts accumulate, so too does the potential for a cascading series of defaults and bankruptcies, rippling through the global economy like a tsunami. In response to mounting economic pressures, central banks have embarked on a perilous path of unconventional monetary policies, from zero interest rates to quantitative easing on a massive scale. Yet, far from solving the underlying issues, these measures have only served to exacerbate them, fueling asset bubbles and widening wealth disparities. As central banks find themselves backed into a corner, the specter of negative interest rates and helicopter money looms large on the horizon. But can these desperate measures stave off the inevitable reckoning? Or are they merely postponing the inevitable? Beyond the confines of economics lies a world fraught with geopolitical tensions and strategic rivalries, each posing a unique threat to global stability. Whether it's the simmering conflict in the South China Sea or the escalating tensions in the Middle East, geopolitical flashpoints have the potential to ignite a global conflagration with far-reaching consequences. In an interconnected world, no nation is an island unto itself. The ripple effects of geopolitical crises can reverberate through financial markets, triggering panic and uncertainty among investors. But amidst the dizzying array of charts and statistics, let us not forget the human toll of economic turmoil. For behind every data point lies a human story of dreams deferred, livelihoods lost, and futures uncertain. As we gaze into the abyss of uncertainty, let us remember that the true measure of a society is not in its GDP or stock market indices, but in its capacity for compassion and solidarity. In the face of unprecedented challenges, we must arm ourselves with knowledge and resilience. Whether it's diversifying our investment portfolios, building up emergency savings, or cultivating valuable skills and networks, there are steps we can take to weather the storm and emerge stronger on the other side. Remember, the future is uncertain, but it is not predetermined. By taking proactive steps to safeguard our financial well-being and support our communities, we can navigate the stormy seas ahead with courage and resilience. Debt, the double-edged sword that has fueled economic growth while simultaneously sowing the seeds of financial instability. In this segment, we'll unravel the complexities of debt and its role in shaping the modern economy. From the rise of sovereign debt in the wake of wars to the proliferation of consumer credit in the age of mass consumption, debt has become a defining feature of our economic landscape. But as debts accumulate, so too does the risk of a catastrophic unraveling. Oh day! The world stands at the precipice of a debt crisis unlike any other in history, with governments, corporations, and individuals drowning in a sea of red ink. The stage is set for a reckoning of epic proportions. As the guardians of monetary stability, central banks wield immense power over the fate of the global economy. But in their efforts to stave off crises and stimulate growth, have they inadvertently sown the seeds of the next catastrophe? In the aftermath of the 2008 financial crisis, central banks embarked on a grand experiment in monetary policy, deploying unprecedented measures such as quantitative easing and zero interest rates. But as the adage goes, there's no such thing as a free lunch. Today, central banks find themselves trapped in a catch-22. On the one hand, they must continue to support asset prices and stimulate growth to avoid a deflationary spiral. On the other hand, their actions risk inflating dangerous bubbles and distorting market signals. Beyond the realm of economics lies a world of geopolitical uncertainty and strategic rivalry. From the rise of China to the resurgence of Russia, geopolitical tensions are on the rise, casting a shadow over the prospects for global stability. Whether it's the South China Sea disputes, the crisis in Ukraine, or the conflict in the Middle East, geopolitical tensions have the potential to disrupt global supply chains, drive up energy prices, and trigger market volatility. In an era of globalization, no nation is an island unto itself. The ripple effects of geopolitical crises can spread far and wide, reverberating through financial markets and undermining investor confidence. As we delve deeper into the intricacies of the global economy, let us not lose sight of the human cost of financial turmoil. Behind every statistic lies a human story of dreams deferred, livelihoods lost, and futures uncertain. From the factory worker struggling to make ends meet to the small business owner fighting to keep their doors open, the stories of everyday people remind us of the profound impact that economic crises can have on human lives. In the face of adversity, let us stand together as a global community, offering support and solidarity to those in need. For it is in times of crisis that the true measure of humanity is revealed. As we gaze into the abyss of uncertainty, let us not succumb to despair. Instead, let us arm ourselves with knowledge and resilience, preparing for whatever challenges may lie ahead. Whether it's diversifying your investment portfolio, building up an emergency fund, or acquiring new skills and knowledge, there are steps you can take to mitigate your risks and secure your financial future. In the face of adversity, let us draw strength from one another, offering support and assistance to those in need. Together, we can weather the storm and emerge stronger on the other side. As our marathon exploration comes to a close, let us take a moment to reflect on the insights gained and the challenges ahead. The road to recovery may be long and arduous, but with perseverance and determination, we can overcome even the greatest of obstacles. Remember, the future is not set in stone. It is shaped by the choices we make and the actions we take today. By coming together as a global community, we can build a brighter and more resilient future for generations to come. Thank you for joining us on this epic journey through the tumultuous waters of the global economy. May we emerge from the storm with wisdom, compassion, and a renewed sense of purpose. Until next time, stay vigilant, stay informed, and above all, stay hopeful.